What's up, traders? I'm Hotshot. This channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. Please trade at your own risk. Now, this video is going to be the optimal trade entry setup. I'm not going to lie, y'all. I love this setup. I think it's more powerful than the silver bullet. I think it's more powerful than the 2022 model. And I think it's way easier than both of those models as well. With this setup, I'm also going to have a game changer at the end of this video that's going to make you see this setup way easier. So make sure you stick around to the end and you can definitely check that out. It's like a hack for this optimal trade entry. Now, y'all are asking for market structure. Y'all are asking for more daily bias. Y'all are asking for more silver bullet. Those videos are coming, but I have not uploaded an optimal trade entry video. So here it goes. Now, with this optimal trade entry, specifically, the optimal trade entry is based on buying or selling retracements. So as the market makes an impulse move higher or lower, that impulse price move has to be incorporating a break in market structure. Then you want to buy or sell the retracement to capture the next leg higher or lower. Now, what makes a trade entry optimal is the fact that it will occur at a key time of day. It's a specific time window that begins at 8:30 and ends at 11 New York time. In this time window is when the pattern often forms. However, it can also form before 8:30. Specifically, though, you want to take entry within this time window. ICT says to focus on a rule-based approach and stick to it so we won't be confused when things go wrong. It'll simply just be a losing trade. You want to know what you're doing, what time of day you're doing it, what you're looking for, longs or shorts. And if it doesn't fit the criteria, you do not do anything. Just let it go, okay? We base our framework for the optimal trade entry around Fibonacci. And Fibonacci is not magic. It's the target of liquidity that is magic. The Fibonacci just helps us frame an underlying context. It just gives us a framework. So with that being said, let's check out, where's my favorite tools right here. So first off, I want to show you guys my Fibonacci levels, okay? These are my Fib levels. These are really the only levels that you're going to need. The 0 level, the 0.14 level, 0.705, 0.791, 0.5, 0.59, negative 0.25, negative 1, negative 0.62, 0.618, and negative 2. These are the only levels that you will need, okay? Now, these two levels right here, these green ones, these ones are not necessary, but I added them. I think that they are necessary for sure. They're not necessary from ICT's teaching the optimal trade entry primer video and the pattern recognition series. He doesn't really use them, but I think they're highly necessary, and I'll explain why. So if you have your Fib level set up, this is exactly how this setup works, right? So let's say that price is moving up and then it displaces up, right? And it takes out this high. This is considered a break of structure, okay? Breaking structure to the upside. And optimal trade entry is based on buying this retracement. So you would buy here, right? This is where you would buy. And if you drew your Fib off of this leg up to the high right there, this is where you'd want to take your entry. So ICT says that the 0.705, that is the optimal trade entry level. However, he likes to take his entry right before price taps the 0.618 level, right before that, simply for spread reasons. He likes to assure himself that he is in the trade due to spread, okay? So that is exactly why that 0.59 level is there. The 0.59 level is where we will set our limit entry, our buy limit for this example, and our stop loss is going to go right at the 1 level of the Fib. No breathing room, nothing down here, right here, because if price takes out this leg, then our idea is invalidated. The optimal trade entry levels right here should hold price and make it continue going up, okay? And The 0.14 ICT says specifically, you want to take your first profit right before price reaches up into the zero level. Why? Because oftentimes price likes to move up like this and it doesn't take out that high. Instead, it comes back down. So you want to take out a little bit of profits, or you want to claim your full position, however you want to be as a trader. He says take partial profits right here, right before it runs out the zero, because it can do exactly this. And then you'll lose out on an opportunity that you were a winner in, but you just didn't claim partials. Now, this right here is calculated the 0.59 as entry, to the 1 as stop loss, to the 0.14 as first take profit. The reason why I have these levels is simply because it equals about a 1 to 1 R. So as soon as, with this, it's very, very systematic. It's always going to be a 1 to 1 R at my first take profit. Next take profit is not going to be the zero because we're considering this as our first take profit, but the next take profit is 0.25, the negative 0.25, and this will equal about a 1 to 2 R. Now, again, you could claim partials, or you can just simply keep running, you know what I mean? But once, I forgot to mention, once price taps into our first take profit, make sure that you move your stop losses to break even, okay? You want to make sure that your stop loss goes to break even, okay? Now, once price taps the negative 0.25, let's say that price did something like this, right? And then it tapped into it, right? Let's say that it did something like that. As soon as it taps 0.25, you can claim partials again, but make sure that you move your stop loss up below one of these legs. You know what I mean? Below one of these lows. You want to make sure, though, that you're not putting it below relative equal lows, because that's just kind of setting you up. Price likes to gravitate towards that liquidity, relative equal lows, relative equal highs. So don't set yourself up. Put yourself right below one of the legs. Make sure it's not a relative swing low. And then next target will be the negative 0.62. Now, with the negative 0.62, that's about a 1 to 3 R. You could claim your full profits there. You can claim partials. You can, you know what I mean, do as you please as a trader. But let's say that it did this number again, right? Tapped into there. You don't want to put your stop loss under this leg because it's too tight. You want to put it under this one, right? This leg, price still has the opportunity to sweep here, liquidity run, right? Hold and continue up, okay? So you want to put your stop loss under this leg right here. Now, next take profit is going to be the negative 1. And this is going to be one full standard deviation. And it's going to be about a 1 to 3.88 R, 1 to nearly 1 to 4 R, right? Again, you want to make sure that you move your stop loss accordingly. Sorry, had a little interruption there, but to resume, you want to make sure you move your stop loss low, a good leg, you know what I mean? Move it up in profit. Now, if price wants to come back for whatever reason, stop us out, you know what I mean? We've achieved a good amount of profit. Now, the very last take profit level that you could hold to, if you are ballsy, you got a lot of hair on your chest, and you just want to, you know what I mean, go for the long haul, the next take profit is the negative 2 fib level. This is 2 standard deviations. This will reward you a 1 to 6 risk to reward ratio. And this is very often, it happens a lot. I'm not going to lie to y'all, specifically on the 1 minute time frame. So now that we kind of went over this, let's show you an example right here. So first things first, you want to delineate your 8:30 to 11 time. Okay. Now, why 8:30 to 11? Well, why 8:30? Because that's when news begins releasing. And why 11? Because New York lunch is from 12 to 13, aka 1 p.m., from 12 to 1 p.m. And many traders, money managers, institutional traders, you name it, a lot of them don't wait until 12 to take their lunch. A lot leave early. So around 11, volatility begins to slow down until the afternoon session. So long story short, just delineate your 8:30 to 11 window, okay? So there's our 8:30, and here's our 11 window, right? Now you're going to be doing this on the 1 minute. ICT in his optimal trade entry primer series, he demonstrates it on the 5 minute. However, I think this window is a little too small for the 5 minute. Like you could see that it's very, let's see, if we were to go from, because price took out this high here with this impulse leg. So if we drew a fib from this swing low, because this is the origin of the impulse, to this high, you can see that it just went to the 50%, right? Now, if you were to drag your Fibonacci to this low, to the new swing high, because this high took out this high, right? This break of structure. You dragged it up to that one, you can see that price tapped it out. So in this situation, you would take your point A right back to where it came. And you can see that it actually traded straight into that optimal trade entry. So if you were to take your buy position right there, stop loss right below here, take profit 1 was hit for 1-1R. Take profit 2 wasn't really hit though. Okay, it wasn't really hit. Now this is a 5 minute. I love looking for the optimal trade entry on the 1 minute though, and I'll show you why. The 1 minute gives so many optimal trade entries within this small window, and it gives such big risk to reward ratios. If you notice here, you want to wait till after 8:30. Once that news releases and all these big wicks come out, you want to wait and see where does price displace, right? You notice price displaces down right here after 8:30, and it takes out these lows right here. It took out this low, took out this low, and hell, it even took out this low right here, right? So if you took your Fibonacci from this high up here down to that low, you could see that it tapped into the 0.5 level, but it did not give an optimal trade entry. Now, you notice right here, price ends up, once it taps into the 0.5, price displaces down. How do you know it's displacement? Well, it creates the fair value gap, huge displacement candle, more than one. You know what I mean? So right here, if you wanted to, you could take your fib from here to the swing low right here. And look at exactly what it does. It taps straight into that 0.59. We would get triggered. Now, it's not an optimal trade entry because it didn't trade into the optimal trade entry level, but I consider this an optimal trade entry because it tapped the 0.59 level. Okay, stop loss is going to go right here at the 1 level. First take profit got hit for a 1-1R. Second take profit got hit for a 1-2R. Third take profit got hit for about a 1-3R. And fourth take profit got hit for about a 1-3.86R, nearly a 1-4R. Look at how beautiful that setup was. Now check this out. Price ends up displacing up, right? It displaced up right here and took out this high right here. You see that? Displacement took out a high. Draw your fibs off of this low right here to this new high. And look at optimal trade entry. Comes right into the optimal trade entry level. Of course, our entry is right here though. Boom. Stop loss. Gonna go right at the 1. Never got tapped. And look at this. Look at this. If you would have held for 2 standard deviations, if you got a lot of hair on your chest and you went for it, you just hit a 1-6R. And this is how you could pass your funded challenges in 1 day, literally. If you would have caught this nearly 1-4R, and then you would have caught this 1-6R, that's a 9-10% gain. If you're using a 1% risk, if you're using 2%, oh my goodness, you just made like an 18 to 20% day right there. Beautiful, beautiful, right? Now, I personally only like to look for the setup from 8:30 to like 9:30, right? If you guys like trading the silver bullet specifically for that 1 hour, try this. Try this optimal trade entry on the 1 minute. Okay, let's go back to the previous day really quick. We went back to the previous day, 8:30, right here. Let's see. 8:30 to 11, right? 8:30 to 11. If you notice right here, we have price displacing huge above this candle and this one right here above these highs, right? Price displaces like crazy above these highs. So if we were to take our fib from this level here to this high, it goes to 0.5, right? Now, anytime price taps the 0.5 level, and that's a valid retracement. If it doesn't tap the 0.5, you want to drag your fib to the next high, right? But in this case, since it tapped the 0.5, we're going to drag our fib to this swing. And since this price took out this high, we're going to drag it up to this one. And again, it didn't tap into our optimal trade entry. Let's say we had our buy limit set right there. It never triggered us in. Instead, it took out another high. So we're going to drag again to the new high. And boom, look at this one. Right here to the new high. Boom. And look at what it does. Tap straight into our level right here. Our green one where we want to take entry. Let's say we had our buy limit set right there. Boom. Stop loss goes at the 1. Take profit 1 got hit. 0.14 for a 1-to-1R. Take profit 2, 0.25 got hit for a 1-to-2R. Let's see. And take profit that 3 didn't get hit. You see? So y'all could backtest this and see what gets hit more. A 1-to-2R, a 1-to-1R, a 1-to-3R. You know what I mean? And the one that gets hit the most, maybe stick with it. You know what I mean? Because long term, that'll guarantee you profitability, right? So here's the setup right there. Now, this is all bullish, of course. And if you wanted to, you can continue to drag and bag it. Let's say that you went with this one, right? Let's say after you took this position, I'm gonna just clear it up, right? And price took out this high right here with this expansion. Again, Fibonacci, this OTE is based off of buying retracements. So after it takes out a high, after it expands, what's it likely going to do? Retrace back into the range, right? So right here, it retraces, but it would have tapped us out. Now, again, here's the example that I told you. If it comes and it taps us out, all we do is take this one and drag it back to this leg. And boom, look, that optimal trade entry still. So you could enter the second position right here. You had your first position here, second position here. Boom. And you can see that they both, you know what I mean? They both would have been profitable. Now, again, took out this high right here, right? Boom. You took your low to this high right here. It only tapped the 0.5 levels, right? You take this low. Oops, not that one. You take this low, you drag it up to those levels. Because once it expanded, took out the highs, you would drag your fibs. Look at right here specifically. This is what I meant earlier. So look at how it comes down, taps into our optimal trade entry area, stop loss right here. And look at first take profit got hit, but price did not run out that high. Instead, it turned around. And you can see that. See, that's a beautiful example of that. That is why we take our first take profit at 0.14. So that is how you do the optimal trade entry like a pro. Okay, it's beautiful setup every time. Now, I told y'all I was going to give you a game changer. Okay, this is how you're going to be able to see these setups so much easier. They're going to be so beautiful to you. You're going to go right here to indicators and you're going to look up MTF EMA. Okay, and it's going to be the MTF EMAs by Finn's Man. It has like 168 on it. You're going to click that, add it to your charts. It's going to come to your charts and it's going to say like daily and stuff. These are the settings you want to use. You want to use the 1 minute. Make sure that use current chart resolution is unchecked. Make sure it's unchecked. Use the 1 minute. Change the first EMA to 9 and the second EMA to 21. And then turn these 3 and 4 ones off. You're only going to use these 2 EMAs. Okay. Now, every time price comes back into the 21 EMA and the 9 EMA is holding over, this gives you direction. If the 9 is over the 21, then you're looking for buys. If the 9 is below the 21, then you're looking for sells. But whenever price comes back, now This is gonna be mine, y'all. I see nobody else calling it this. I see nobody else using this. Hot Shot invented this, okay? This is called the slingshot by Hot Shot, okay? If I see anybody else using it, I'm just gonna assume that you've seen it from me, because I have never seen this anywhere. All right, this has come from my own back testing, my own personal experience. I've been in the game for 5 years, and this is what I see happen very, very, very often. When price comes back into this 21 EMA and that 9 EMA doesn't cross over, it holds. This is like a slingshot, right? It's like price is slingshotting just to take off, right? This is your slingshot. Comes back in right here. You would have drew your fib from here to this high. As soon as it comes back into the 21, that's your retracement. So you just measure from low to high. What is, you know what I mean? What's the levels? If it's running out like this, you drag it to the next one. And if it's in this area where you're supposed to take entry, you buy there. You buy. You don't even think about it. You don't second guess it. Those EMAs are telling you it's slingshotting. Okay. Now, the slingshots aren't going to hold every single time. Like, for example, right here. Let's say that you were looking for a bearish slingshot right here, right? Because price, let me delete this. Because price right here came up into the red one and you were looking to sell, right? And right here, if you were to like look, like, where did it come from? It came from here, right? You were to drag it right there. It didn't come into your optimal trade entry, so you wouldn't have entered. Now, right here, it tapped into optimal trade entries all throughout here, and you could have sold here. Now, through here, you wouldn't even think about the EMA. You know what I mean? That's whenever you wouldn't think of the EMA. The EMAs give you very small, you know what I mean, very small moves that are very, you know what I mean? Look at this one, the one that I showed you earlier from here to here. It's literally the slingshot. Look at how the slingshot held. It crossed over. Oftentimes after a crossover too, like you can see here, price crosses over. That crossover oftentimes take out either a low or it takes out a high. On the crossovers, oftentimes price will retrace and slingshot, as you can see in both of these examples. And after that slingshot, price takes off. After that slingshot, price melts. So check out those EMAs, throw them on your charts. I know a lot of you like to use indicators. I think this one's worth utilizing. Backtest this optimal trade entry. Let me know what you think. If you like this video, if you feel like you've got value from it, make sure you drop a like. Comment down below if you think I can utilize something better, if you think that there's something that I'm missing, if you think anything that can possibly critique me and my trading and make me a better trader, please let me know in the comments down below. I appreciate all the views, but you know what I mean, all the love. Subscriptions, if you're not subscribed, make sure you subscribe for more videos. But until next time, thank you for watching. Hot Shot out.